Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look at what's going on the euro currency. So probably you heard that the Dakar strike has been postponed on January 15. So this is some kind of the gift to the new president, an inauguration date. Joe Biden actually doesn't hide its really happiness with this event. So somehow this problem has been resolved, at least temporarily, but Dakar should start working immediately after this agreement, and somehow the situation should stabilize in ports in the East Coast. So on the euro currency and in general on the markets, everybody right now preparing for payrolls report. As you know, EDP numbers were a bit better than expected, so from that standpoint of view, here's some question maybe exist concerning the level of the next rate change by the Fed. Supposedly, if we will get really bad numbers on the payrolls, probably the chances on a 50 basis point cut in November also will increase, which probably should support euro. If it will be more or less significant numbers or near the expectations, then probably we will not get any upper direction, and the market could try to test the levels that we have specified, particularly speaking 110 lows, and flirt somewhere with the oversold areas, so theoretically it is possible. That's what we're currently considering. Besides, you can see that divergence exists, lows have not been tested yet. Even from the pragmatic point of view, here some significant stops probably could be placed, and hardly they will be left without attention of the market makers. They would like to just grab them on the volatility on the payrolls numbers. That's what we have. Besides, if we take a look at other markets, particularly speaking, 10-year bonds, you could see what has happened recently. So yield has jumped significantly, and it seems that market absolutely hasn't heard about the 50% base cut by the Fed last month. So as I said yesterday and today, we're also talking about this. So it's mostly the effect of this rate cut totally erased and considered action that we have. So on the dollar index, it's also interesting situation, but it's maybe a bit longer term. But here, with this most recent action, market has formed bullish reversal swing. Yes, we probably will get some bounce here. It's actually the pullback that we're considering right now on the euro currency as well, to the upside from the 110 area. But overall performance and performance on the weekly chart creates chances for the dollar to show significant action to the upside in nearest time. So what the reasons will be, it's currently difficult to say, but probably they will be really important. There will be some important fundamental news, geopolitical news probably. And in general, I would say that the 100 even area on the dollar index is an area that will set the direction for the nearest few months. Actually, downside breakout, it will be a very significant event, and we will get the significant weakness in the dollar in this case. If market will stay here, and currently based on the performance that we see right there with this possible hand shorts, and if you take a look at the weekly chart, I said we have a kind of the double ripple look-alike here. With this type of the performance, it seems that chances on possible upper continuation currently, at least based on the picture that we have, looks a bit better than the chance on a direct downside breakout, despite that we've got really significant plunge here to the downside. So let's keep watching. This is very important for performance on the dollar and correspondingly on the performance on the euro. In the short term, what we could do today on the euro currency, on a 4-hour time frame chart, you can see that market barely is completed 1618 extension of the butterfly. Personally, on the 4-hour time frame chart, I would watching for kind of the momentum trade. So we have great downside action. At the same time, 110 is significant support. and any pullback here, this will be good chance for a scalp short trade, kind of the bread and butter trade or something of this kind. So the pullback to the nearest standing level either 30%. This also you can see previous support resistance area exists, lows, previous lows, slightly high, maybe 111. So these two levels might be interesting, or the market could show the downside bounce. So the one of the setup that might be watching here is actually momentum, bearish momentum trade. On the hourly chart, here you could see that something seems to preparing. We talked yesterday about the possible hand and shoulders, and here's market is forming kind of the round bottom or something of this kind. And here you have the well, classical concern what to do. So either to take position with some uncertainty degree, but place relatively tight stop, because you could place it just below daily oversold, for example, and below 110 area, or wait for more confirmation and get entry with a less risk but at the worst price. So this problem probably you will need to resolve by yourself. Sometimes it makes sense to split the positions, as I always talk about this, so you could take some minor part if you would like in general. If you would like to make a bet on this payrolls report today and trying to take the bullish position here, aiming on some bounce here to the upside. In this case, you could, for example, split position, take some part, small part here with the placing stop, and then see what will happen. If you will be right, and later you could add more to your position if market starts forming really something interesting. For instance, hand shorts that we talked about yesterday. If market will collapse, this will be minimum loss. So actually nothing interesting. You could do it either before payrolls or later when the data will be released. For instance, if on the daily chart you will see clear wash and rinse. For instance, market will dive immediately, touch from oversold, for example, grab stops below, and then will show fast return right back up. That will be confirmation that probably you will get your pullback. But all the stuff is related to the numbers, releasing of the numbers. Not everybody likes this, like me, for example. I do not like to trade this. So, but in general, you understand the idea. So on a 4 time frame chart, we could wait for some bounce, watching for momentum trade. Scalp traders should decide whether you would like to take the part in a possible pullback on the long side of the market, taking all this doom and gloom on the payrolls report. And in the longer term, it's very important what will happen with the dollar index and what will happen after retracement on the euro. For instance, market will show a bounce here, and what will happen next. But this is probably the subject already for next 1-2 weeks.